Hey, I said it at the beginning of the week. There's not a lot of economic news coming out this week. Everything is gonna revolve around, you guessed it, what's going on in Iran. And that has been the story all week long. Do we have a truce? Do we have peace? Are we gonna attack? All these things have made a big impact on interest rates this week. So where are we at with the big three? Well, prices really are staying the same. Inventory is still pretty high. No real change there. Rates are up, and that's no bueno as we head into Friday and this long weekend. Let's talk about some of the headline news. What moved the market this week? I already talked about that a little bit. We'll go dig in a little deeper. We got pending home sales, which shows some positive movement. Not a lot. Should have a lot more right now, but it is showing positive movement. And home builder sentiment, well, it doesn't suck so bad this month. Not as bad as it was last month. The VA rates up and away in this ugly balloon. All right, let's break down what's going on this week. Okay, so we got Iran. Iran conflict is keeping interest rates high. And these elevated oil prices, we're talking $110 per barrel. Basically, they were at a low of 6.09 for conventional. Now we're nearing 7%. That is no bueno. And, this week, the costs have come down. They've gone up. President Trump says, hey, I'm going to wait a while before, I'm going to give the peace talks a chance. I think the truce is coming. I think we're going to get a good peace plan from Iran. And you know what? Iran is basically giving us a middle finger, just kind of stringing us along, because Iran knows the longer that they stall, the more angst, the more heat President Trump is going to see from his constituency. That's you and me, baby. And that ain't good news for President Trump. That's certainly not good news for the homeowners and the people who are trying to refinance, and not good news for those who are trying to get into a home and save some money. I'll break down where we're at on rates here in a few minutes, but I tell you what, the Iran conflict, man, that is what is keeping oil prices up, inflation fears up, and interest rates up. Let's talk about that hot inflation data. It basically reinforced the spike in mortgage rates last week when the April Consumer Price Index report, which was released on May 12th, showed that inflation had increased 3.8% annually. And then the Fed meetings came out this week. And this was from their meeting last week. And there's talk, if we get to about 4% on inflation and the CPI, I tell you what, some of the Fed members said, you know what, we may actually have to raise the Fed funds rate. That's going to make nobody happy. But you know what? The Fed's going to do their job, and their job is to keep inflation low, and they do it by adjusting the Fed funds rate to basically keep inflation from going out of control. The job market's good. I mean, the unemployment initial jobless claims this week were pretty low overall. So, we had that going for us. But, man, that inflation number not looking good. And, again, oil's up 8% from its most recent low, and mortgage rates have moved in tandem. And here's the thing. What's the big deal about oil? We got our own oil. Man, oil drives up the prices of goods and services across the globe. That impacts our inflation locally. Inflation goes up, mortgage rates go up. So what else do we got going on? Well, here's the other one. Moody's. All right, Moody's gave the U.S. credit a downgrade, which is adding pressure to treasury yields. Basically, the Moody's downgraded the U.S. sovereign credit to A1 from AAA, bringing it in line with the S&P and Fitch, which is already downgraded. And the concern is that federal debt could reach 134% of GDP by year 2035. So really, when we got that downgrade, I tell you what, that was no bueno. That popped that 10-year treasury yield up as well. As we as investors assess the risk for holding U.S. debt, that translates directly into increased borrowing costs for home buyers. So really, that's what's pushing rates up this week. Not a lot of economic news. Let's get into some of the housing news that came out though. Home builder sentiment was up in May, and it overall rose finally. All right, we went up to 37 from 34. So in line with where we've been most of the year, but just a little better than April numbers. All three metrics, hey, you know what? They're up a little bit, and that's good news. Despite rates being a half a point lower this year than last year, all right, that's good, but affordability and elevated construction costs are still hurting the new build market and hence the new build sentiment. And we have pending home sales. We had a nice little move up in April. That's right, up 1.4% month over month increase, which beat expectations, and year over year was up 3.2% too. So really great news. And what we see is 3 months in a row of rising sales. That is good news. And we're actually now at a pace, the pace of sales went from 3.98 in March to 4.02 million in April. So, again, not lighting it up, not great, but not terrible either. So pending home sales good. Again, interest rates stay elevated though. We're going to see these pending home sales kind of stay sluggish. We're not going to see that pop that we need, because guess what? Pending home sales goes into existing home sales next month. This is the way it is. All right. But also, if interest rates keep going up, you're going to start seeing more and more people who go into contract, they're going to drop out of contract. Why? Because the rate that they were pre-approved at maybe 2 months ago, 3 months ago, that's not the same rate that they're getting when they go into contract. And that, my friends, is going to cause several cancellations. We're already seeing that. I'm seeing that in the market. I just had one client he was a backup on a purchase. The original, the one who was selected, backed out because he couldn't no longer qualify. That's happening. It's going to continue to happen as long as we're in this higher rate environment. Let's take a look at interest rates. We are back above 6.25. Actually, we kind of dropped a little below 6.25, but you know what? We're hanging out right there. And guess what? Here's what Larry Gonzalez sees based on history. Tomorrow or Friday, markets close early. We're not going to see a lot. And you get a long weekend, you know what? Nothing ever good comes out of a long weekend when it comes to interest rates, especially when we had a bit of an improvement. You can see that little dip there. That's Wednesday, Thursday. But we were squarely above 6.25 going into the weekend. And hey, we can talk peace all we want, but you know what? Talk is cheap. We need to see some peace, baby. We ain't seeing it yet. All right, but you know what? You compare this year to last year, we're still a quarter point lower than we were last year. But interest rates did go up as we got into June. They didn't start going down until July. Will we see the same thing this year? We'll find out. Hope you have a great Memorial Day weekend. God bless America. God bless all those who sacrificed all. It's Veterans Day. We get that in November. But Memorial Day, hey, we're honoring those who gave all. All gave some gave all. And I hope if you're in Oahu or if you're anywhere where there's a national cemetery, I hope you make it out there to pay your respects to all of those service members who died to give us the freedom that we have today. Nothing greater than our freedom. And I am so grateful for it every day. I hope you are too. And for all those who are serving right now, I know it ain't Veterans Day, but hey, one, I salute you. Two, I'm grateful for you. Have a great weekend. Aloha.